So I want to do a quick video on relevant liquidity and what it means, where it is, how you can spot it, and how it can make your trading so much easier when you know exactly what you're looking for, what's relevant and what's not relevant. So I don't want to make this video too long, so let's dive straight in and let's get this sorted. So I've put the chart here. I mean, this wasn't that long ago. And was it the 9th of January 2026? So I've chose this just because it's got good examples on it pretty much, and it was only a couple of days ago. Happens every day, but hey. So we're starting from Asia. This blue box here is Asia. I always have the blue box as Asia. As we can see, we've come down in Asia, creating liquidity in various places from the off. I mean, admittedly, I don't really count this too much as relevant liquidity in that first hour. Where that first box is, it ain't really the most relevant, but we're gonna put it there anyway. You'd rather have it there if you've entered in, or to be safe you might have it up here. I mean, we could put it on both if we really want. Then we're coming down, not much happening in Asia. We're coming along here. We've made a little break because, as you know, there's many different entries into trading, which I'm not going to go through all the entries. That's another video. That's what I could do for another video. But when it breaks, you get these early sellers that are in the market. It comes back down. They jump some more. It's got a bit more evidence there. Jumping as well, putting their stop losses back above there, which is now creating equal highs. So a lot of people think, there could be relevant liquidity above that. There it is. And it starts pushing down. Comes down to Asia low. Reacts off Asia low. Feels this imbalance here. And decides to push down lower from filling that imbalance. I mean, we're on the 5 minute. You could say there was a little break there. It's come up, took that little bit of liquidity here. Let's put it in there anyway. Little tiny bit of liquidity there, not much, but as we're going down, you might have got people just taking that. Then it's done a false reaction of Asia low, making people think you're going to go long. So people have jumped in. All it's done is manipulated. Got to take this bit of liquidity, and it's pushed further down, making people enter even more down here. Let's get rid of you. Let's bring that down as well. So now we've got people entering down here, and we've got liquidity up here. I mean, you could X off all of these if you wanted, or just get rid of them when you know that liquidity has been taken. Now, it started inducing down and people thinking, right, we're in the money here. But no, to get one more push down, it's come up and look, as you see, it's swiped all of that liquidity to simply push down lower. That's all it wanted to do, is grab that liquidity there and push down lower. See how it comes up with speed and momentum? Speed and momentum all the way up to the top, takes that liquidity. Look at the reaction. Look at the reaction on that candle. Then you've got a little push away here and a big vector candle here pushing that away. Then what do we see? We see another break there. There's more to it than just breaks, but I'm trying to make this video simple so you can see it very basic. Breaks again. Now you're getting more liquidity building up here. Breaks again. Down here, what do you know? More liquidity coming down. Then you get little bits of sorry, my phone was just going there. The market starts slowing down and you're thinking, okay, what's it doing here? Then the market does start slowing down. It starts showing signs they could be making a small reversal. You could potentially say we've got a relevant break of structure here. Let's come back down to an entry there on the 5 minutes. I don't want to go too in depth in this because I would be looking in a lot further, but I'm just showing you this as an example. And it starts pushing up. Now we've taken that little bit of liquidity and it's lost its legs. It needs more. The banks, the institutions, they need more money to come up. Now granted, this was around news time, but it's a prime example of what it does. So when people are entering in here, where do you think liquidity is going? It's going under here. You've got more people entering up here. Where's the liquidity going? It's going under here. And you'll get many people entering in these little ones. Then the news comes. What's it do? It makes you think it's going long. What's the news do? Comes out, takes all of that new liquidity that's just come, comes all the way up, and look, takes out that liquidity, that liquidity, that liquidity, takes everyone's money all the way up to the top. Look, then once it takes it, you know it's relevant because it comes all the way back down. Look how fast that is. I know that's the news, so it's a little bit different, but when you go through the markets, you'll see it so much more. Look, like there, speed and momentum all the way up, takes what it needs to then push all the way back down, comes all the way up, literally takes out all of that liquidity to then drop all the way back down, building more liquidity on the way down. And that's in a simple format how it works. It's as simple as that. I won't go into 1 minute. Oh, here's one that I was marking up just yesterday. Look, it's just building it up, building it up, building it up. And here, look, speed, look at that there. Look, liquidity above here, where it's made a break there. It's come down. Look, let's quickly jump on here. Look at all of them equal lows that are marked up all the way along there. Look at that. It comes down, breaks it up there, takes out them equal highs there, which have both got a lot of liquidity above. Let's get rid of that. And then look, straight back down again, back down into eating this liquid. Look, liquidity there, started eating all of that. And that's how relevant liquidity works. That's why when you get people holding from so much time, like from all the way back here, from weeks ago, from all the way back here, thinking it's just going to keep reacting off really old liquidity. Like, how long do you think people are going to be holding liquidity there? Yes, there will be liquidity there. I'm not saying there won't, but how long do you really think they're going to hold it for? We'll dig deeper on another liquidity video, because I want to dive into people moving their liquidity, moving it. If they've entered here, they've probably moved up to break even up here, but that's another whole video. But anyway, I hope that helps. I hope that shows you how relevant liquidity works and how they just bring the markets up to get what they need to then push away again. That there is a false break of structure. Many people will enter in here thinking it's going to go high, their liquidity will be low below here, and then they just take that on the way down as well. It's a false break of structure. Again, that's another separate video. Anyway, hope this helps. Hope you enjoyed it. Hope you learned something. As always, like, share, subscribe. Best thing I like is put a comment on what I can do better, how I can explain better, and just any feedback at all. It always helps. So other than that, hope you're well. Happy trading. Don't get stressed. Don't get too emotional. Let's make some money on the charts.